This is a Forex Preview here at XM.com. Thanks for joining us. I'm Christina Marujos, and with me is lead investment analyst Rafi Boyadjian. And of course, we'll be having a look at the Reserve Bank of Australia, which meets early on Tuesday. And investors are widely expecting the central bank to announce a change in policy, possibly by scaling back its virus stimulus. However, Rafi, the new surge in virus cases led some areas in Australia to impose new lockdowns, dampening therefore the optimism around economic growth. Is this something the RBA will take into account and maybe even reflect in its announcement?
Well, Christina, that is indeed a very good question, because the current rise of this Delta variant across Australia, which has led to fresh lockdowns, as you mentioned there, does come at a crucial time for the RBA, because the RBA does have two very important decisions to make about its quantitative easing measures. The first is about the yield curve control policy. Now, the policymakers do need to decide at the July meeting whether or not to extend the, at the moment they are targeting the 3-year Australian government bond that matures in April 2024. So they have to decide whether or not they want to roll over this to bonds maturing in November 2024. So if they decide not to extend it, that would indicate the RBA does see a turnaround in the economy and in inflation, of course, before April 2024. And it would also signal that the cash rate will be raised by spring 2024 at the very latest. So this would probably be seen as a less dovish tilt by the RBA if they do decide not to extend the yield curve control. But they do have another thing that they have to decide. So they also have, of course, in conjunction with the yield curve control policies, they also have their regular bond purchases, which is mainly aimed at the 10-year yield. The current round of 100 billion Australian dollars will be completed in September, and they have to decide whether this should be extended, whether they should decide to announce another round. But there is speculation that instead of having another round, they will actually go for an open-ended bond purchase program. So this means that it's not going to have an end date. So such a move would indicate that the RBA is in it in terms of QE for the long haul. And although it would probably mean a slower pace of purchases in the coming months, it could also mean that the program will drag on for far longer than other central banks. So this could be interpreted as a more dovish move. So it's going to be quite an important meeting, and investors might have a hard time trying to decide what it all means.
And let's have a look at the Aussie as well, because it came under pressure last week, especially after the resurging US dollar. Can the RBA offer it some support somehow?
Well, it is hard to see that happening unless the RBA completely ignores the current virus situation and sets out a gradual exit from its pandemic stimulus. Most likely, though, the RBA will use the current situation to its advantage and stay overly cautious. There is a risk that investors, though, will be overwhelmed by all the big policy changes that are expected to be announced on Tuesday, and they might ignore all the policy clues in the decision, and they might focus on the overall tone of the statement and, of course, Governor Philip Lowe's press conference. So if the RBA does sound more worried about the risks from this Delta variant, even though overall its policy decision would probably be a step towards tapering, the Aussie could come under selling pressure. Of course, dollar strength is the main reason why the Aussie has been doing so poorly since June. So even if the meeting does turn out to be more hawkish than expected, the Aussie might only be able to post a modest rebound at best.
Rafi, thank you for joining me. This was a Forex Preview on the RBA meeting coming up on Tuesday. Thank you for watching at XM.com.